Hi everyone. This evening I want to talk to you about a couple of key areas that I commonly see in my practice which might be relevant to your circumstances or give you some ideas to think about. The first is buying together with friends and family. The second is the use of gifts of money or provision of guarantees from parents. And then I'm just going to wrap up talking about some of the legal implications from those sorts of property ownership structures. So the first trend is the increase in first-time home buyers pooling resources to buy property in groups with either family or friends. This is actually quite an interesting one, not only from the affordability perspective, but I guess also from the social perspective in terms of challenging our perceptions about what the norm is in terms of buying property in New Zealand. The most common examples I tend to see in my practice are an obvious one, de facto or married couples buying together, and then not so commonly parents buying with children, brothers and sisters buying property together, and then slightly less common but also on the increase, friends buying with other friends. So what are the pros and cons of doing this? A bit of a minefield. The most obvious example for the positive is that you can more quickly and easily get your deposit together for a property, which, as we all know, is probably one of the most difficult things to achieve if you're paying rent in Auckland and trying to save for a deposit. Another plus is that obviously all the costs associated with property ownership, such as the setup costs, mortgage repayments, maintenance rates and so on goes on, are obviously shared, so the risk for each party is diluted. I guess there's also the chance that you're going to be able to buy in an area that you actually might want to live in. And I guess I also do see slightly less common situations where, for example, one person might have a really healthy deposit that they've saved up, but then another person has a better cash flow or ability to repay higher mortgage repayments, and so that's a combination that can work quite well to aid both parties to get onto the property ladder. And I guess it's not just a case of pooling financial resources. People do have obviously lots of different talents, and so if you've got a deposit, why not hook up with someone with mean building skills, for example? Maybe they should start a Tinder for house buying. In terms of the cons, probably everybody here who's ever flattered is probably thinking of the worst case scenario where you're not only stuck living with someone who's socially inept and doesn't clean up after themselves, but now suddenly you're financially tied up with them and you own a house together. I guess this probably goes to the point that you would probably want to put a lot of energy into deciding who to go with quite carefully from a practical perspective. And I guess, like Tony was saying, it might not even be a house that you live in that you invest in. It might be a rental property with tenants in it that you've bought together with somebody else. I guess it's also worth bearing in mind that if we get real about it, that it's probably not going to be your forever home, but it is simply a means to an end to enable you to get onto the property ladder, which is obviously the hardest step. Once you're on the property ladder, it just makes it so much easier to create more options for yourself in the future. The second trend that I want to talk about is people, it's also an example of people pooling resources together, but in a more specific context relating to parents and children. So I personally see it happening more and more now that getting either a loan or more commonly a gift from parents or using equity in their family home is getting really, really common, especially in Auckland. I mean, it obviously sucks if you don't have parents who've got a house or super loaded parents or generous parents, but quite a few of the instances I see, they're just normal people who want to help their children out from a really practical perspective. And their children are really grateful for it as well. The most common example is a gift. That's where you have evidence of payment of money with no strings attached, so it's not a loan. That's generally a requirement of a lending bank. Some lawyers would encourage parents to take a small ownership share in the property, which just protects them a little bit more because it gives them some more control. But generally, I find that parents are perfectly happy to trust their kids 100%. A second common way I see parents helping children is through providing a guarantee in respect of the children's borrowings in favour of the bank. So this means, of course, that the bank has a second recourse in the event of default by the kids on their loan. So that may enable a first-time home buyer to actually get a loan approval when they wouldn't otherwise, or it might enable them to just get away with having a smaller deposit or avoid paying low equity premiums, which is obviously an amazing advantage. And it doesn't require a big chunk of cash to be provided, which is great. So how it works, if you're interested from a practical perspective, is that the children will either go with the bank that already has a mortgage to the parents' property, so that the two mortgages are linked up, or sometimes parents even refinance away to a new bank that the children want to go with. It's obviously really important in this circumstance that if parents are providing a guarantee, that it's limited to as small amount as possible. If it was unlimited in amount, then that means that there's no monetary limit on how much liability the parents are up for if the kids screw up and don't pay their mortgage. And obviously the pros for this are pretty apparent. The downsides are a bit more obvious for the poor parents, but then some have actually said to me that if it means that they get their 30-something-year-old child to finally move out of home and stop bludgeoning off them, then that's a very small price to pay.